In the late 1990s, Enron wasn't just successful, it was unstoppable. The company started as an energy business, moving natural gas across America, but soon it transformed into something much bigger. Enron became an energy trading giant. They didn't just sell energy, they traded contracts, futures, deals, even weather risk at its peak. Worth over $60 billion, called America's most innovative company multiple years in a row. Executives treated like celebrities, investors loved them, Wall Street trusted them. Employees believed they were building the future, but behind the scenes, things were already breaking. Enron had a huge issue. They were losing money, but instead of reporting losses, they hid them. Executives created complex partnerships to move debt off the books. On paper, Enron looked massively profitable. In reality, they were drowning in hidden losses. But almost nobody outside the company knew, until one employee got scared. In August 2001, a vice president inside Enron sent an internal email, not to the press, not to regulators, to the CEO. She warned that the company's accounting could cause a massive scandal. She feared Enron could implode in a wave of accounting scandals. She wasn't trying to destroy the company. She was trying to save it, but the warning wasn't taken seriously enough, and months later, the truth started leaking out anyway. By late 2001, journalists started investigating. Analysts started asking questions. Investors started panicking. Then the truth came out. Enron had hidden massive debt. Profits were partially an illusion. Financial statements were misleading. The stock collapsed from around $90 to less than $1. Thousands of employees lost jobs. Many lost life savings tied to company stock. Executives were investigated. Trials followed. Prison sentences came later. And Enron filed for bankruptcy. At the time, it was one of the largest corporate collapses in history. The email didn't cause Enron to fail, but it proved something important. Someone inside knew the truth. It showed. The problems weren't accidents, they were warnings ignored, and it became a symbol of corporate whistleblowing. One voice inside a massive company, trying to stop disaster before it happened. The Enron collapse changed business forever. New regulations were introduced. Companies faced stricter financial reporting rules. Executives became more legally accountable. But the biggest lesson? Companies rarely collapse overnight. Usually, warnings happen first. And someone, somewhere, sees it coming. If you enjoy stories about the decisions that made or destroyed billion-dollar companies, subscribe to Business Files TV, because some of the biggest business disasters in history started with one small decision or one ignored warning.